This is the weekly review for the week of June 6th to June 10th, as well as this week's Sunday preparation. So, coming into the week, I was bullish on Euro because I wanted to see those daily equal highs being taken out. And for the most part, we've been respecting bullish PD arrays on the way up. So, that's why I was anticipating these equal highs up here at the 109,400 figure to be the draw on liquidity for this week. So starting on Monday, there was sort of a setup here that I did not take. So because my bias was bullish, I wasn't really paying attention to shorts, but we had this SMT with GU here that created equal highs, and then we had a pretty clear intraday draw on liquidity of these equal lows. So we have this displacement here. Now the reason I just didn't take it was because of the candle closure here. This was not a real beefy candle that ICT talks about, but we still had this institutional order flow entry drill play out with the logic of taking out these intraday equal lows, which I think makes sense given the SMT and the displacement away from the high. And this was the non-farm payroll high. But yeah, I didn't take any trades on Monday. Tuesday was where I set limits for a long. So at the end of Tuesday, I anticipated Tuesday's low to be the low of the week, since we got this London low raid into the OTE of the daily price swing that we had, as well as inside this H4 fair value gap here, as well as a SMT. So we had this big displacement up, and this was the M15 fair value gap and breaker. So I marked out discount and premium from the swing low to the swing high that it formed on this displacement move, and this is the 50% level. So I placed my entry right here on the breaker, so I was swerved by probably like less than a pip. All right, 1.5 pips. And I was targeting London high just because that was the next low-hanging fruit liquidity after this short-term high that was created prior to the RTO here. But price did come into discount, but it was just very, very slim, like less than a pip. It went down below. And the reason I placed my limit here is just due to the confluence of the breaker and the fair value gap, as well as it being in discount. So the bias played out. It was just that I was unlucky and I didn't get a fill here. But the logic for me is like the most important thing that I'm trying to figure out, and making sure if the logic is sound, which here it was. Now, coming into Wednesday, I was still looking for longs, but we were traced back into this breaker, right? And obviously I removed my limits, and also it wasn't in a kill zone. It was at 5 a.m. So like between 5 and 5:15. But looking back, I think that based on the logic, this entry still would have made sense, because my stop would have been placed below Tuesday low. And again, at the end of Tuesday, I felt that Tuesday, if we were going to be bullish, Tuesday was going to be the low of the week, right? So Wednesday should have no business coming down here. And if we coming down below Tuesday low, that is. So even if I left my limit on here, with respect to the weekly range, this would be in deep, deep discount, right? If I got stopped out and we took Tuesday low, then for sure we would not be bullish. But just based on the weekly range logic, I think that me leaving a limit here to be filled even outside of a kill zone would have made sense, just based on it being in such a deep discount of the potential weekly range that we were going to have, and at minimum targeting these equal highs up here. Now, Wednesday didn't really give any setups. So the two things that I noted on Wednesday on my printout was, again, like the range expansion, and then we had consolidation. So anytime like London session or the interim session has such a big range like this, and there's also no news in New York, we're really just going to end up consolidating. And these were just like paper trade ideas that I had that didn't, play out to fruition to these highs. And the reason why we didn't take these highs, those being the equal highs that formed from Friday and Monday, is due to the news. So ICT tweeted, right? He said to pay attention to the economic calendar because that's when the big moves are going to occur. And when I was looking back this week, that kind of made sense because we didn't have any news until Thursday and Friday. Thursday was the ECB news, and then Friday was the CPI. So price basically just consolidated, relatively speaking. Of course, there were plenty of low time frame trades to be taken on Monday through Wednesday. But in terms of the weekly range, Monday through Wednesday consolidated and created these triple equal highs. Then the news hit on Thursday, which is when we created the high of the week, fell off, and then fell off some more on Friday. So I think paying attention to the news drivers, the high impact news drivers, is something that I'm going to be paying attention to, and framing those news drivers within the weekly range of where I think the high of the week and the low of the week is going to form. So yeah, I'm going to kind of keep note of that in this Sunday preparation and the future Sunday preparations for me going forward. So that's why there really were no trades to be taken on Wednesday. Now, Thursday is when we had that ECB news, and I felt that obviously those equal highs were looking pretty bait to be taken, and I was going to take a trade during the news, but price just wicked down so fast that I didn't get a market entry, and it honestly saved me from a stop loss. So I saw this Asia low raid and break in market structure, and I wanted to get in on this fair value gap here to target the equal highs. But again, price just came down so fast and went below London low before I could even press the buy button. And yeah, it saved me from a loss, and I just sat out and wanted to see what price would do. And because I was bullish, I was anticipating these highs to be traded through and to continue on up to take previous week's high. But that didn't happen. Instead, we got this displacement down, and we formed a bearish mentorship setup. So we had this DXY SMT from Thursday high, and this also rated a daily high up here, as well as these triple equal highs into a daily order block. And we had this displacement down, and basically I marked out the discount in the premium here from this first swing low, this one right here. So from that swing high to this swing low, and I put my limit at the breaker, but this time around we just went up into the fair value gap, the lower fair value gap, and traded down. We didn't even get into a discount, a premium. So honestly, I'm not too sure about this. Like maybe this is just because price was so bearish that it couldn't even reach into a premium. But from my understanding, we always want to short in a premium because that's better RR. So I don't know if I should like split the risk and put a limit on here and then also put a limit on here. That's one of the things that I'm struggling with right now, in terms of like how to play this, because sometimes price will retrace into a premium, sometimes it won't, and in this case it didn't, and it continued down lower. So by the end of Thursday, I was like, yeah, we're pretty much bearish because we took out Wednesday low and Tuesday low. So Friday gave a very nice setup, but this was in London session, so I was not up to take it. And the logic here was really, really nice. So this was previous week's low. So obviously we come down below it, and we're moving up above previous week's low, right? So I know if I was watching this live, I would be like, oh, are we going to reverse here, right? We just swept a significant liquidity pool, that being previous week's low, and we're moving up. Are we going to go higher? But there was no significant break in market structure, right? So unless there's a break in market structure, the raid of a liquidity pool, it doesn't mean anything. So because there was no break in market structure, we should have no fear that this is going to be going higher, right? And on top of that, we're inside a bearish H4 fair value gap, that being this right here. So price comes down, this is previous week's low, this is not significant displacement, and also there is no break in market structure. So there's nothing to fear here about this, just running up here, up into these imbalances, right? Why is price not going to come up into those imbalances? So from my understanding, we raid Asia high, and we have displacement off of it, right? So we now have a low time frame setup inside a high time frame PD array, and there is no bullish break in market structure. So this is giving us all the signals to go short. On top of that, where does price retrace up to? Well, it retraces up into a premium and above the 12 a.m. price. So this was a really clean short here. And if I was watching this live and I saw this, was able to connect all of those dots, because obviously this is in hindsight and everything looks really fucking clean in hindsight, but the whole thing is if you're able to see it before price or live before it happens. I think if I did, I would have logically placed the order up here on this fair value gap. I would have never anticipated price coming up this high. I know that for sure. I would never have anticipated that. But coming up above this daily 12 a.m. opening price up into this fair value gap here is certainly where I could have logically placed an entry. And then of course we had a nice and immediate move down to take the low hanging fruit here, M15 swing low, and pretty much we had these all the institutional order flow entry drills play out. Now, the reason I did not take any of these is because I didn't know the draw on liquidity. Typically, from what I've seen, is if you're able to identify the draw on liquidity, the raid is going to be, and I think ICT mentioned this in one of his mentorship videos, the raid of opposing liquidity to or with respect to the draw on liquidity, is the initial move. And if you miss that, then you can just get in on all the fair value gaps. But the point is, you need to know where price is drawing to. And I couldn't identify that on Friday. So I saw all of these live, but I didn't want to take a trade because I really wasn't sure what price was reaching for. And looking back, it ended up reaching for this one right here, this H4 swing low, as well as this imbalance over here. So yeah, overall, the week wasn't that great. I didn't get any trades, but the cleanest trade that I could identify was getting in on this breaker and targeting these relative equal highs. That's ideally the trade that I would have wanted to get, but I did not get that. So moving into next week. Next week we have, on the economic calendar, we have high impact news. So we have PPI on Tuesday. From my experience, PPI doesn't move at all. So the big move is going to be Wednesday. We have the FOMC meeting and the federal funds rate change, which is probably going to be higher. I'm not sure about core retail sales. We'll see what happens with that if there's a big move, but it's really between 12 and 2 p.m. that probably the high of the week is going to form. So in my plan here, we see that price is definitely bearish now, right? In this weekly range here, price came up into premium, respected a order block in premium, and we also had several daily raids. We raided this swing high into the order block, and then we also raided this swing high into the order block again, and also had a SMT in the order block. And we're also about to violate this bullish PD array here, this breaker. So because price is violating bullish PD arrays now and respecting bearish PD arrays, we could say that going into this week, we're going to be bearish. And we have these three liquidity pools here, these equal lows on H4, and then this daily swing low here. There's no more imbalances, so it's just these three liquidity pools. In terms of, and then we also had this daily break in market structure after the raid. So everything is leaning or pointing towards bearishness. And then up here, I just have my note that Wednesday could form the high of the week with that FOMC news. And Monday and Tuesday is just going to build liquidity just like we had last week with these triple equal highs here. So the only thing that I can see is price coming up into this H4 imbalance or this daily imbalance up here. That's what those red lines are. And then in terms of the liquidity for the week, it's really just so far Friday low and Friday high, because this up here is previous week's high here. I don't think this should be violated if we're bearish, right? Price, it makes no sense. Price has no business coming up here if we're bearish. We should form some type of a low time frame setup inside this daily fair value gap or this H4 fair value gap here. So yeah, going into next week, I'm going to be bearish, expecting all of these sets of lows to be run out. The same thing really for ES and NQ as well. It looks like, I guess this market maker buy model is not going to be playing out. You know, we had the break in market structure, but now we're rolling over. I've been trying to focus more on S&P since ICT is doing that day-by-day analysis for S&P, so that's why I kind of am sticking more towards that rather than NASDAQ. But yeah, again, we came up into this order block, into OTE of the price swing, SMT inside the order block, and now price is rolling over, and we violated this bullish PD array, the breaker here. So we have these two sets of lows that are probably going to be the target for this week. And similar to EU, we have two sets of imbalances, this daily imbalance and this H4 imbalance. Now, I don't know if Wednesday is going to make the high of the week here, because I've done some back testing for indices, and when there's a bearish week, there's like a 50-some% chance that the high of the week forms on a Monday. So I'm either thinking we form the high of the week on Monday or Wednesday, but I'm leaning towards Monday. So maybe we just come up higher into this H4 imbalance and then roll over to take these two liquidity pools. But we'll see what happens with the trading on Monday. But yeah, going into the week, I'm bearish, but I'm still going to be following along with what ICT posts on Twitter in terms of what his draw on liquidity and stuff like that is. And then in terms of the trades for S&P, really I was just following what ICT was posting on Twitter, kind of just like everyone else. We had an SMT here, so NASDAQ rated the previous week's low, where S&P didn't. And we formed a very nice setup here. I ended up placing limits for the one on NASDAQ. It was the same thing. The only reason I did NASDAQ over S&P was because NASDAQ had the raid. I didn't end up getting a fill again, and that was simply because I placed my limit at the standard 25% of the fair value gap, but we ended up swerving that just a little bit. But we did come into discount as well, just very, very barely coming into discount here. And the 25% would be right there. So swerved just by a little bit. But the Tuesday entry here was extremely clean. And then the compound entry during lunch here, ICT talked about that in his mentorship review. So Tuesday was a very nice day for S&P. Wednesday we took a loss as well. ICT also took a loss, and that was due to this London raid here. We raided London low. So right, coming off of Tuesday, you know, this is bullish. We had that SMT with NASDAQ, and we're thinking higher prices are in store here. These relative equal highs, these relative equal highs. And price also gave a SMT, and we had that bullish displacement up, get in on the discount here in the fair value gap, and price ended up rolling over. Stop was below here, but even if you put it below here, eventually it would have taken you out anyway. And then that was all of my trades for S&P. So that, or the one on NASDAQ, that was the swerve. Obviously comparable setup on S&P. And then I took the Wednesday setup on S&P and took a loss. But yeah, Thursday was the lunch setup that ICT was talking about. So yeah, price coming up into this imbalance here, and also into OTE of this daily range. But the other thing is also that we didn't notice was the SMT up here. So price came up into the daily order block, consolidated. So nothing, like in hindsight, seeing this was bullish. But yeah. So in summary, this week, expecting bearishness. So hopefully we can find some low time frame setups in these higher time frame PD arrays.